All right, and we are back again. So, how broken is a global supply chain? Going to talk about some experts, their comments, supply chain experts that get paid a lot of money to do consulting work for Fortune 500 companies about how broken the global supply chain is. There's been estimates coming out for the last month or two that an enormous percentage of Fortune 500, S&P 500 companies would be drastically affected by the global supply chain problems. And if the central bankers decide, the Federal Reserve decides, Steve Mnuchin decides, James Bullard decides, Jerome Powell decides, Mr. God Complex himself, Neil Kashkari, decides that unlimited or near unlimited or whatever the hell they want to do with printing, or Congress decides they can print as much as they want, but there are still real-world problems with goods and services that central bank currency creation, central bank credit creation, central bank bailouts cannot fix. Okay, so I have two articles there on your screen. I spliced them together. One of them I found through Shy Girl, Tracy Schuchart on Twitter, that iPhone makers are planning on moving out of China in the next couple years. So this is somewhat of a surprise. My friend Tony Nash, who is another global supply chain expert, I interviewed him in December. You can go back and listen to the archives. That interview in the archives is an in-depth interview about the Chinese economy and manufacturing. And he thinks that a lot of jobs will be leaving China in the next couple years as well. He put out a tweet about this. So there will be iPhone suppliers, people in the iPhone supply chain, decisions by companies like Wistron, Hon Hai, Inventec, Pegatron, reshape tech supply chains, from Bloomberg, March 28th. Wistron, one of the Apple manufacturer's partners, said this week half its capacity could reside outside China within a year. The declaration underscored how the Asian assemblers that keep the world supplied with iPhones and other gadgets are shifting to a higher gear after the global pandemic. This will probably get demonetized anyway. Showed the folly of staking everything on one country. The move in taking production out of China has been underway since the trade war. It was really slow, though. Companies were still looking into it, even after the tariffs. A lot of people thought that the tariff hikes were going to rapidly bring jobs back, and that just didn't happen. It took a couple tariff hikes for companies to start to even think about moving jobs back and start to accelerate a timeline. But the global pandemic may actually accelerate things. Now, a lot of these factory jobs that do come back to the U.S., they may be automated. So the U.S. economy, the U.S. government will collect tax revenues, but a lot of these jobs may not be nearly as many jobs as past factories with a lot of human beings in them. They're probably going to be a lot more automated. Okay, the move in taking production out of China has been underway since the trade war between the U.S. and Washington, D.C. and Beijing reached its zenith in 2019. Now the global pandemic is expediting that. Decisions by companies such as Wistron and other Apple partners, including Hon Hai, Precision, Inventec, and Pegatron, I've never heard of these companies, but I guess are important in the global supply chain for iPhones, could reshape tech supply chains. Taipei-listed Wistron is targeting India, where it is already making some iPhones, along with Vietnam and Mexico, setting aside $1 billion to fund the expansion this year and next. Quote, "We understand from a lot of messages from our customers that they believe this is something we have to do," Chairman Simon Lin said. Quote, "They are happy and appreciate that we can continue to make such a move, and they will continue to work with us." iPhone assembler Pegatron is also diversifying manufacturing sites. Chief Executive Lau Sejong said the company hopes to start manufacturing operations in Vietnam in 2021 after setting up a new plant in Indonesia last year, and is further looking at India as a location for new facilities. Apple's main assembly partner for AirPods, Inventec, said it is preparing to establish a unit in Vietnam. More than any other assembler, Hon Hai encapsulated how the global pandemic brought the world's number 2 economy to a standstill, better known as Foxconn. It augurs a potential shift in a global production paradigm that has governed the electronics industry well more than 3 decades. The company also has facilities in India, where it began churning out iPhones last year, and Vietnam. Quote, "Trade the global pandemic, all these things will make the world very different in the next decade, said Alex Yang, the company's investor relations chief. It is unlikely that China will fully give up its place as the world's electronics workshop anytime soon. That is because it's difficult to replicate the intricate network of suppliers, competent workers, efficient distribution systems, and large home market that the country offers. Large-scale relocation of manufacturing capabilities would also take time. Apple chief executive Tim Cook said in late February that the company was not looking to make any quick moves out of China in light of virus-related supply chain interruptions. Quote, we're talking about adjusting some knobs, not some sort of wholesale fundamental change, he said. That's it for this article. And this other article you can see there on your screen from Akiko Fujita, an anchor reporter at Yahoo Finance, came out a couple days ago on March 27th. Once in a century disruption reverberates across global supply chains. When Resilink CEO Bindia Vakil first got word of the global pandemic cases out of Wuhan in January, she mobilized her clients, which were Fortune 500 companies, to seek backup suppliers right away. They scoured the radius around the epicenter of Hubei province, identified all the parts that were sourced from there, and mapped out possible alternatives. Early action by the supply chain risk management firm allowed her customers, which include IBM and Micron, to continue with fewer disruptions out of China, but with the global pandemic since spreading well beyond Asia and crippling critical factories, firms are finding it increasingly challenging to find workarounds to keep their businesses operational as usual. Quote, they had already begun discussions by mid-January with those suppliers to get capacity at the backup site. Wuhan didn't even get knocked down until the January 22nd, so our customers had a real head start. Vakil said in an interview with Yahoo Finance, factory closures are limiting access to key components, while airline groundings are delaying shipments, and border closures are forcing companies to reroute their cargo, reducing margins. Quote, China was the first one to be disrupted, but then Malaysia shut down, Thailand shut down, most of Europe shut down, Vakil said. Many of our customers took advantage of backup sites, but obviously in the coming weeks, the backup sites went down too. So this is very serious. Okay, I have more to this article. I'm going to skip around a little bit. I'm going to play you a 3-minute, 33-second Bloomberg interview that the CEO here was cited on March 17th. So Bindia Vakil, CEO of Resilink, who helps these large Fortune 500 companies deal with supply chain issues. She did an interview about 2 weeks ago, 13 days ago, on March 17th for Bloomberg TV. I'm going to play it right now. It's only 3 minutes and 33 seconds long. Let's listen to that now.
First of all, give us the lay of the land. What do supply chains look like right now?
First of all, thank you for having me. It's a pleasure to be here. The global supply chain right now is disrupted. We are seeing disruptions across the board, from the demand side all the way to people, labor shortages, as well as raw material shortages, all the way to the delivery side. Companies cannot deliver to customers because while they or their supply chain might be fine, their customers might not be. So it's a very tough time for supply chains, suppliers, companies, all together, and we are not seeing this top off yet. So there's still some more that we're expecting in the next few weeks and months.
Are you seeing any differences in regional trends, whether it's China, where obviously they've been going through this for several months now, but sort of coming out of it, versus the US, versus Europe?
Definitely. In China, we see obviously the cases have tapered off, but largely that is because of the lockdowns that have been implemented. It's not as though the virus has been defeated. So it will be interesting over the next few weeks as China starts to resume operations, bring workers back into public places, to see how will we see a second wave of transmission there. Because if we do see that, then we will expect to see continued disruptions over the next few months across the world, and certainly in China. And China is a huge hub for the high-tech industry and many others, but certainly the high-tech industry is heavily reliant on China and parts of Asia. But in Europe, for example, what we are very concerned about right now is life science pharma and the impact there. Not only are they consumers of the life science pharma and the drugs and products that come from there, for the surge in demand they are seeing from the patients that are admitted right now, but they are also huge exporters of key drugs that the United States needs. And so we're very concerned about the supply of essential drugs coming into the US for the surge that we're expecting here.
So talk to us about what that means then for the consumer, for patients, for people who need these drugs. You're telling companies to prepare for a 6-month-long disruption to the global supply chain. What does that mean for consumers? What does that mean for us?
So as consumers, what is really important right now is to make sure that we don't get sick. And the reason for that, and I think governments and local administrations are making best efforts to do that, is because we don't want to end up in the hospital needing drugs that we simply may not have enough of, or because we're not replenishing fast enough. What happens in pharmaceutical industries is we have quite a lot of finished goods inventory. So for the next few weeks, we are actually quite protected. But as the demand surges and our speed of replenishing those the used up inventory is not fast enough, therefore, over the next week or months, we should start to see some real shortages. Maybe some patients who need elective or preventable care might be denied medicines, and then only those who have essential life-saving or critical treatment needs might be accepted.
Okay, so let me continue with this article from Yahoo Finance from a couple days ago, Disruptions and Diversifications. Nick Vyas, Executive Director of Center for Global Supply Chain Management at the University of Southern California, said the effects of the global pandemic are far-reaching. Quote, I would call this a once-in-a-century disruption that we're facing, he said. What makes it even more unique is that the disruptions aren't happening all at the same time. It's moving from country to country, continent to continent. The disruptions have hit nearly every sector. Closures in Chinese factories prompted Apple to warn investors the company would fall short of its revenue target. Major car makers in North America and Europe suspended operations to halt the spread of the virus, and order cancellations from European fashion brands have reverberated to manufacturers in Bangladesh, leading to significant job losses. In a recent survey by S&P Global Market Intelligence, 79% of companies said the global pandemic had it's going to get demonetized anyway, had a negative impact on business, citing disruptions to organizational supply chains as a key concern. The economic shock stemming from global pandemic-related closures are likely to accelerate the localization of supply chains that began with the U.S.-China trade war, according to Vyas. While tariffs forced some companies to shift hardcore manufacturing, I don't know why they said hardcore, maybe he meant hardware, manufacturing out of China, it says hardcore, manufacturing out of China. Component manufacturing and raw materials still remain largely reliant on the country. Instead of low cost, Vyas sees a shift to regional supply chain networks tied to customer demand, leading to decentralization and a, quote, decoupling out of traditional manufacturing hubs. This would be the exact opposite of Peter Schiff's decoupling. So, if I'm catering, I'll just added that part in there. I don't think that was not talked about in the article. Quote, so if I'm catering, for example, to the Latin American population and North America, my supply chain network would be heavily focused out of Mexico, end quote, Vyas said. Quote, it may be a little bit more expensive in some regions, but we will then become much more diversified. So the just-in-time supply chain, probably over, where all these parts are being moved around on container ship with cheap oil. Still, data from Resolink suggests an over-reliance on China in the short term, and this is something that... I forgot the geopolitical strategist. Drawing a blank on his name. I'll remember in a second. Still, data from Resolink suggests an over-reliance on China in the short term, especially as it relates to critical medical supplies. An overview of supply chains attached to the world's 1,000 largest companies or their suppliers shows more than 1,500 facilities tied to China's most heavily quarantined areas, compared to just 230 in Italy and 3 in South Korea. I'm thinking of Peter Zeihan. Peter Zeihan has been warning people for over a year now that China was going to lose a lot of manufacturing jobs in the years to come. It looks like this has only accelerated it, and he's going to be right about that. I think he was wrong about shale oil companies being profitable at $35 a year ago, but he's probably going to be right about a lot of jobs moving out of, a lot of manufacturing jobs leaving China in the years to come. In fact, Vyas argues the surge in demand for these medical supplies globally has already started to fuel China's bounce back. Quote, from the Chinese government standpoint, I think they're using this as an opportunity to create their to create this superiority status symbol to assure the world that China's back on its feet. If I said, okay, so I have another, let's see here, 1, 2, 3, 4, 5. I have another 5 global supply chain articles, but something that I really wanted to talk about, and this is something central bankers can't fix. They can try to paper over it. They are trying to paper over it. Okay, so when the global economy is functioning normally, American consumers, American businesses, American tourists, they can either buy goods and services out of the United States, or they're going to go on vacation and they're going to spend dollars out of the United States. So foreign companies, when the global economy is functioning normally, foreign companies can earn those dollars. And then that helps them either build trade surpluses, build cash on their balance sheet for companies. It helps countries build trade surpluses with dollars to recycle into the U.S. Treasury market in past good times. However, now we don't have that because there's no tourism right now, really. Well, no international tourism, that's for sure. Maybe some people are still doing some local stuff. I don't know. Probably not, though. So that's dead. And American businesses, American consumers are not buying nearly as many goods outside of the United States. So what this means then is all this dollar-denominated debt, all these dollar liabilities, these forward dollar swaps, and there's tons and tons of articles lately, and I've talked about this recently with the dollar tug-of-war update with the dollar index, that a lot of the mainstream financial professionals were writing articles about this $12 trillion margin call on the dollar. However, and that's what created the demand, because dollar funding markets in Europe, dollar funding markets in Asia, they all broke in the last couple weeks. Credit markets broke, bond markets broke, a lot of professional money managers went to cash, and the global economy, because it was not functioning normally, these companies could not earn their dollars and could not make payments on their dollar-denominated debt. One of the Chinese real estate companies, my friend Emma Molman, Evergrande, that Chinese real estate company, they have $100 billion worth of dollar-denominated debt. She was talking about this on Twitter in the last couple days. So, the global economy not functioning normally, American tourists, American consumers, American companies not trading goods and services all over the globe. That means that foreign businesses and tourist areas are not earning those dollars, and that's what the problems you had in the last 3 weeks or so. You had defaults on the dollar-denominated debt, on these dollar liabilities, the forward swaps, and everyone thinks that the margin call was 12 trillion. It was not 12 trillion. It was much larger than that, and that's why the dollar went up to over 102 on the dollar index before the Fed had to do an insane amount of announcements with 2 press releases on currency swaps in a week span and all the other crazy things. The Fed was trying to announce whatever it could, promise as many dollars, flood the global economy with dollars, because they knew that the margin call was not 12 trillion, and 12 trillion is a big number. The margin call was at least double that. If you add in the dollar-denominated debt with the amount of dollar liabilities that the Bank of International Settlement said in December 2019, the margin call was actually at least 24 trillion. It might even be larger than that. So that's why the demand for dollars is strong. That's why, let me hit the refresh button. That's why, in spite of all this craziness that the central bankers are saying and all the promises of near unlimited liquidity or unlimited liquidity, Congress is talking about an additional stimulus plan for trillions more. They were talking in the last couple days about another 4 trillion in stimulus. That's why, in spite of that, the dollar index is back above 99. Because these margin call problems, these foreign companies outside the United States are still not getting the dollars they need. They've gotten more dollars lately, but there's still problems with the dollar shortage. So the margin call is absolutely enormous. If the global economy was functioning normally, there would be more dollars leaving the US. But that's not happening right now. And it looks like it's going to be a while before the global economy, the global supply chain, international tourism is going to be anywhere back to normal. I don't even want to put a timeline on it. I've heard some firms think maybe 6 months. There's some articles here that I have that are saying like maybe 6 months things will be better and the global supply chain will fix a lot of the problems. Okay, I'm going to take a look at Super Chat now. Thank you, Justin, for the Super Chat. Okay, let me look at more Super Chats. JB, thank you for the Super Chat. What would be a hedge to stagflation? If you don't mind sharing, what's your financial strategy going forward? You've asked this multiple times, and I've told you that it was easier to prepare 6 months or a year ago. There's still quality gold stocks. The gold stocks are going to be making a lot of money. So the mine closures some of the mine closures are not because there's actually people infected there, but because there's government-forced precautionary shutdowns. So gold stocks are a good hedge right now. At some point, after the oil market bottoms, oil stocks will be good hedges. Just not right now. Oil's still a falling knife. It's not a good time to be buying oil stocks yet. 6-8 months ago, it was good to be buying toilet paper, Charmin. The time to hedge, as I told you when you asked this before, was 6 to 8 months ago. There was time. Now, there is still bargains on some of the royalty and streaming companies. Those guys have their costs fixed. So they don't have the capex bills, which resource companies have. Resource companies get in danger of if they pay out too many dividends and then they get stuck with a capex bill, then they could get in trouble a couple years down the line. So I'm preparing for stagflation. I've been preparing for stagflation for years. And I have an online business now, which is growing very rapidly despite most people losing their jobs. It's a small online business, but it's still growing rapidly. Okay. Good question here from Super Chat from JB, another one. Where do I see the next manufacturing hub at? Latin America, what's the best exposure to that? International index funds. I don't think there's any good exposure yet. It's not the time to be investing in this yet. Robotics companies at some point that are more pure plays would be good. The problem is that these robotics companies are normally the small pure play factory manufacturing robotics companies are normally bought up by large companies like Amazon and others. I can't remember the name of the robotics company. I speculated on it in 2013, and it went from like $3 a share, and it was bought out at 15 or 16. I can't remember it. It was a long time ago. So I don't think it's the right time to be investing in any global supply chain changing right now. I think the automation, robotics and automation, will probably be a good long-term trend, along with cybersecurity. I think the cybersecurity companies have really good growth. They have the best growth, I think. The valuations on those stocks were insane for years. I haven't looked recently, but I'm guessing they did come down. Where will the factories move? I think they will move more local to where people are consuming. So I think there will be more factories in Vietnam, more factories in India, more factories in Mexico, but I think there will be more factories here in the US, but those factories, like I said earlier, will not have as many humans. They will tend to be more automated. So the humans who are hired, they will be getting a pretty good salary, but there won't be as many jobs for humans. So they will get a solid salary, but there won't be as many jobs for humans like the old factories of old. It's not an investable trend right now. Super chat from Dimitri. Would I short the airlines? We don't know what the bailout's going to look like. Now, we do have a lot of details for the airlines more than the other bailouts, but we don't know exactly if the details are going to change. So, in my opinion, if you're going to short the airlines, you better hedge that trade. I would not short the airlines, though, right now. The time to short the airlines was 2 months ago. I was doing videos on this. I gave it away for free. I was getting information out of Wuhan, and the travel stuff the travel bans here in the U.S. hadn't even started, and already, the amount of flights and the problems, I could see this coming. You don't have to be a rocket scientist to have seen this coming. Canadian banks I've warned about for a while. The guy in The Big Short, Steve Eisman, Was it Iceman? I can't remember his last name. The guy from one of the guys from The Big Short. He's been short Canadian banks for a year now. Canadian banks are actually doing pretty well, though. I was speaking with a resource industry CEO saying that the Canadian banks just did bond issuances. So the confidence in Canadian banks is still very high. With the commodities falling, though, I mean, the Canadian dollar is not going to be in good shape. The commodity price is falling. Yeah, Canada is a consumer country. There's a lot of home equity loans. Their housing market could be a mess. Their credit card business, I think JP Morgan already wrote that off over a year ago. Super chat from AskWars11. What should I... It's funny stuff here. What should I be expecting in the immediate future? Congress to be changing the rules. The Federal Reserve will try to paper over everything. The rules for bailouts may change. The accounting rules may change. Behind the scenes, there is a fight of the economic and political elites here. Most people aren't aware of this, but I was going to do a video on it, so I'll just preview it now. I was going to do one of the short videos on it with stories, with the different stories for a PowerPoint slide presentation, short videos that I do, was that Nancy Pelosi was actually paid to stick into the global pandemic bailout bill an acceleration for the Fed coin, for digital dollar. So you, on one side, you have the faction, and clearly Nancy Pelosi's not smart enough to know what blockchain technology is and Bitcoin. Maybe someone gave her a Bitcoin, I don't know. But she's not smart enough to know that on her own. So someone's clearly, whoever her financial backers are, someone paid her a lot of money to push that stuff. So she's pushing this legislation for cashless society, digital dollar, Fed coin. That was crammed into the congressional bailout. But on the other side, you have what Jim Bianco is talking about, how basically the Federal Reserve was nationalized by the Treasury with Trump. So you have two competing factions here now, power factions in the U.S. government fighting over things. Because I see all the stuff online is that, oh, we're going to a gold standard. Trump just nationalized the Fed. QAnon says the Fed is done. But there's two competing factions here, and the other faction's not giving up. The other faction wants cashless society, wants to ban cash, wants to track and tax every transaction, wants to put a value-added tax on anything Americans spend money on. They realize that a lot of people are getting paid cash under the table for years now, and the government's not taxing those. So you have the Chinese government talking about crypto yuan. You have Europe talking about crypto euro. Japan was talking about studying crypto yen. So you have two competing factions now of economic and political elites trying to figure out who's going to win. And I don't think it's possible for both of them to win. So we'll see what happens. I think there's a competition behind the scenes. The stuff in the bailout, we don't have a lot of details yet. I have not read all the bailout legislation because it's over 800 pages and I have other work I have to do. I have to do paid work to pay the bills. So I've been focusing, writing articles, a lot of articles behind for my Patreon account. Maybe one of these days or two, I'll take the time to read some of the congressional bill and see if I can find anything out. But in crisis times of crisis, the Fed is going to do an insane amount of printing. We just had Neil Kashkari talk again. Not only does he want small business loans forgiven, he said that on a 60 Minutes interview. He's a Minneapolis Federal Reserve Bank president, former Goldman Sachs too. Also ran for a political office, I think, in California. And he said recently that, people shouldn't be worrying about moral hazard for all the stuff that's being printed. JB says, can't tip a stripper with a Visa. Social distancing, buddy. There's going to be none of that for a while. She might be able to take that on her phone, crypto on her phone. I don't know. But I think the governments, whether it's European Union, the US, they're going after this underground economy where people are keeping money out of the banking system, getting paid in cash and not reporting income, and they're going after that. It's a large pool of cash. They're going after that. They want to force that into the banking system. They want to tax it, maybe put a value-added tax on it. Okay, let's see here. I have a couple other super chat questions. Martin, thank you for the super chat. He says he loves the Patreon account content. Great. I'm glad you like it. It's over 600 now. It's been growing very, very quickly. Any thoughts on housing market impact? What do you mean exactly by housing market impact? We're gonna see. I already talked about Cheesecake Factory. That was the first restaurant that said they can't pay rent at all their stores last week. So you're going to see a lot more of that. You're going to see stores. You're going to see restaurants. The National Restaurant Association just said in the last couple days that 11% of all American restaurants will never come back. That's their estimates right now. You're going to see people that can't pay. You're going to see companies that can't pay rent. Stores that can't pay rent. Restaurants that can't pay rent. Renters for apartments that can't pay rent, people default on their mortgages. They're already talking, I think, in California about, I think the banks approved this in California, that people don't have to pay their mortgages for at least 2 months, I think. It's either all being discussed now or it was already approved just for California. Okay, Greg, super chat. So I think I was going to do a separate show on this, so I'll just preview it with the real estate market. That Christopher Whalen, who's a good banking analyst, he wrote a blog post on his website, The Institutional Risk Analyst, that the finance industry froze. The mortgage finance industry froze up in the last 3 weeks. It went a full risk off, full freeze, full collapse in the last 3 weeks. That, normally these mortgage-backed securities and other derivatives trade back and forth fairly easily from income-hungry pension funds and hedge funds levering up and other investors. That thing broke. So I'll talk about that on a separate show. Greg, $5 super chat. When oil prices do rise, do you feel that will contribute to inflation, or will inflation contribute to rise in oil prices? I think oil prices rising contribute to inflation. But inflation is also an increase in the fiat currency and credit supply. And higher prices are a symptom of inflation and in effect, I'm thinking way too much about the global pandemic. That was a Freudian slip. So yes, I also think that higher oil prices cause higher consumer prices too. Those go into the supply chain. We can have stagflation with low oil prices. If the Federal Reserve decides that they're going to give everyone $1 trillion checks, but the global economy is not functioning, we can have stagflation with lower oil prices temporarily. We can have much worse stagflation with lower oil prices. Okay, super chat from JB. Why do you do streams so late? I enjoy the streams, but hard to catch live on the East Coast. I am also on the East Coast. I do streams late because, frankly, I have very serious health problems that I am feeling better, but I honestly do not function very well in the mornings and afternoons. I have to do a bunch of different things. I have a checklist of things I have to do. High protein diet, vegetables, supplements, a coffee in the morning with MCT oil and protein powder. It's a new one, super coffee or bulletproof coffee. Green teas, a couple green teas, and I have to do like a routine of things before I feel halfway decent. I have a couple autoimmune diseases. I don't want to go into it. I have very serious health problems, but I can't work a 9-to-5 job ever again. It's just not possible for me. My memory's pretty bad in the mornings. I have to go through a checklist of things before I feel even halfway decent anymore. So unfortunately for me, I feel pretty good in the late afternoon and throughout the evening, and I can work. I have almost unlimited energy now. I mean, if I want to, I could work till like 5 or 6 a.m. without any problems, with no break. But it's getting there. It's horrible. I've been to a lot of doctors. There's no real solution for some of the stuff I have. Okay, so on that note, didn't want to really talk about my health problems. I don't like talking about them. I mean, I'm feeling okay now. Thank you, Joe, for the super chat. Okay, so if you want to really read more about the supply chain, there's another. We have How the Global Pandemic Affects the Global Supply Chain by John Devine from U.S. News and World Report from March 10th. Blindsided on the supply side from foreignpolicy.com from Elizabeth Broad, March 4th. The global pandemic impact on the supply chain will be bigger than expected by Tanya Garcia on March 9th. How the global pandemic is affecting the global supply chain. Okay, that's a reprint of the other U.S. News and World Report from Yahoo Finance. And then how the global supply chain how the global pandemic, could affect the supply chain and freight shipping from Benzinga on March 16th. So finally, wrapping things up here, I don't think there's any investments to make yet in the global supply chain changing. I think automation will be a good one. The problem is there's not a lot of good robotics pure plays. Every time there's a really good small robotics company that's booking a lot of contracts with Fortune 500 companies to put robots in their warehouses, the company gets bought out for hundreds of millions of dollars more than it should. So this is something you can keep an eye on. But anytime there is a company that starts with a small market cap and they start doing all these deals and maybe they're not profitable yet, or they're small profit and they're about to get a lot of profits, anytime they get a large customer list, like, they get bought out. So maybe there should be more of these companies coming online after, in a couple years, there should be more. But I don't think it's an investment right now. It's way too soon. The other important thing to understand is that the central bankers, they can print as much as they want. They can paper over as much as they want. It's not going to help bring generic prescription drugs back to the U.S. any faster. It's not going to help goods and services move any faster. It's not going to help American tourists go spend their dollars outside the U.S. And this is the problem. And this is why the Fed's worried. Because normally the global economy would send those dollars to those other companies in other countries, and they would be able to service their dollar-denominated debt. They would be able to service their dollar liabilities, their derivatives book with forward dollar swaps, and that's not happening. And that's what's worrying the Fed the most. So the margin call was much, much larger than most people thought. And one of the major reasons, besides all the bond markets freezing up and all the credit markets freezing up over the last 3 weeks or so, why things broke so badly. Okay, that's it for tonight's show. Thank you, everyone, for listening. I have a lot of other great topics I can cover. There are so many things happening right now. It is insane. There are so many topics. It's just me here. I have probably at least months and months worth of different topics that have all been only happening in the last couple weeks. You might see a new video come out in the next 12 hours. There's some interesting things here about food supply. Governments are starting to consider, smaller governments at first right now, are starting to consider hoarding their exports of food, like wheat and some other carrots, some other things. So I'll talk about that. Hopefully that does not get worse, but it looks like governments are considering it's called food protectionism, and starting to hoard food.